Good afternoon, ladies and gentlemen. Welcome to the BCA-SISV-SCAL-SIA webinar, COTMA Revision and Contracts Management Best Practices. My name is Wei Wen from BCA. We are very grateful to have Singapore Institute of Surveyors and Valuers, SISV, the Singapore Contractors Association Limited, SCAL, and Singapore Institute of Architects, SIA, in joining us today to organize this live webinar. With the enactment of COTMA Part A, Universal Extension of Time, and 8B, co-sharing of additional costs due to delays, it is timely for us to provide greater clarity to the industry on the coverage of measures and how it will help alleviate the challenges faced by built environment stakeholders so that they are better informed and prepared to navigate through the uncertainties from a longer-term business sustainability. Before we start, I would like to quickly run through some housekeeping measures. Please note that as participants, you're on mute setting. Should you have any questions or if you wish to add on to the discussion, you may do so by clicking the Q&A button on the screen to type in your queries or inputs. When we get to the Q&A segment, we will also be activating the raise hand function to take live questions or comments from the audience. Should you wish to ask a question verbally at that time, do click the raise hand icon. Do also note that when the session ends, you will be able to direct and access to the evaluation form after you exited the webinar. Once submitted, you will be able to download the speaker's presentation materials via the website as shown. Here's an overview of today's program. The webinar co-chairs will first give their welcome addresses, followed by presentations by BCA and Eldon Law LLP. The session will then end off with a Q&A segment. Let us first invite Architect Tai Lee Siang, Executive Director, Communication and Engagement, BCA, Mr. Koh Zi Boon, President, QS Division and Chairman, Central Management Committee, SISV, Mr. Ng Yet Ning, President, SCAL, and Architect Richard Lai, President, SIA, to deliver their welcome addresses. Webinar co-chairs, please.
Well, very good afternoon to each and every one of you. We have, I think, more than 1,000 participants in this webinar. It's raining a little bit heavy, so I hope you can hear me clearly. It's been almost 12 months now since the start of COVID-19. Industry has gone a long way in tackling various stages of construction-related challenges. Started off, of course, with site safety measures. Thereafter, also dealing with the manpower issues, accommodation issues, transport issues. So there is, in a way, a long list of challenges that the industry have to tackle. But the COVID-19 is so unprecedented that we are in deep peace that as early as April, the Ministry of Law actually started to look at the issues of building contracts. Of course, they look at the whole of Singapore in relation to all forms of contracts. And it is unsurprising that building contracts feature high on the list because of its significant value and in terms of its volume. So MinLaw has been very proactive, working with BCA and also with industry partners to look at how to deal with all the potential fallouts in contract terms. Now, of course, up to now, we have focused a lot on the webinar on other aspects, but it is timely that we tackle in particular the issues of COTMA revisions and contracts management best practices. So while there's a lot of content on COTMA revision, I hope that we don't stop there, but look beyond it to look at best practices, because it is not easy to navigate through. As some of our panelists remarked, that things will become more challenging come next year. So if any assurance we can give you is that we will continue to run this series on the revision as well as the contract management, I believe deep into next year, because we are now just touching on the surface. There are actually many more things that we have to look at when projects starting to go into the deeper end of safe measurements, safe management, and loss of productivity. And as contract issues become clearer and clearer to all parties, then I think we certainly need to come back to discuss. So With that, I will invite my co-chair, Zubun, to also give your opening remarks.
Thanks, Li Xiang. Good afternoon, everyone. I hope everybody is well. Of course, first and foremost, I'd like to thank BCA for this opportunity to partner with Singapore Institute of Surveyors and Valuers. And of course, today we also have SCAL and SIA, both presidents to be here. I think it's really timely. I think as what Li Xiang mentioned, that we have navigated through many challenges within the industry, and I think we are still going through managing it. And of course, with the latest introduction of the COTMA amendment, there are certainly things that we want to keep the industry informed, and of course tap onto the various discipline expertise in sharing. Of course, this is really the start. And just before we started the webinar, I think we were also discussing that among the CIJC, which is a construction industry joint committee, represented by 9 different professional bodies, known as SISV, of course, SCAL as well as SIA is already in present. We're also looking at how we can work together and work alongside BCA to see how we can support the industry as actually we navigate this through, because there's really no a fixed answer to every single item. Every project and its contexts are different as well. Yeah, so certainly look forward in supporting that effort. And once again, thanks BCA for having SISV as a partner for this event. Yep, thanks. Li Xiang, back to you.
Thanks, Zubun. At this point, I also invite our 2 other partners just give your opening welcome remarks. First, maybe I invite Yiming from SCAL.
Thank you, Li Xiang. SCAL is honored to be one of the BCA partners in this webinar on COTMA revision and contract management best practices. As you mentioned earlier, I think we are in the midst of the unprecedented time. COVID-19 actually hit our economy very badly. About 10 billion worth of output has been wiped out. COVID-19 is also causing a lot of disruption and financial hardship to the contractors and the stakeholders in the built environment sectors. The top 3 concerns of the contractors are now the ability to fulfill their contractual obligations, the fast rising costs due to shortage of workers, and the loss of productivity, and the final one is the cash flow. Right from the beginning of the COVID-19 pandemic, SCAL has been actively giving feedback to government on the challenges and financial hardship faced by contractors. In particular, we asked for a blanket EOT, extension of time for all projects, and prolongation cost relief for the contractors, both for public and private sector projects. The introduction of the COVID-19 Act will help to ensure that the costs due to COVID-19 pandemic are shared by all the contracted parties or the stakeholders in the value chain. It will prevent or minimize dispute or lengthy litigation for parties whom are not able to fulfill their contractual obligation due to COVID-19. Instead of spending valuable time, manpower, and resources solving the dispute in court, the resources can be better channeled to rebuild our industry quicker and stronger. We are glad that the government has responded positively to industry feedback and accepted the key principle of our recommendations. They have been incorporated in the latest amendment of the COVID-19 Act under Part 8A and Part 8B. With the commencement of the Part 8A and Part 8B, there are still intricate issues and interpretation that need to be clarified. I hope this webinar will help to answer most of the questions. Please feel free to raise as many questions and feedback that you may have. Thank you.
Thanks, Yiming. Next, I invite Richard Lai, President SIA.
Hi. Hi. Good afternoon, everybody. I hope all are well and safe. It's my honor to be invited to be a panelist in this webinar. This webinar is relevant to all in the BE industry, including architects who are contract administrators in some projects, both public and private. During the circuit breaker period, SIA has looked at COTMA's 2020's impact on the SIA conditions of contract and various contractual implications. In our CB support webinar with our members, SIA Building Contracts Committee, including drafters of SIA Condition of Contracts, had shared about the operation of COTMA 2020 in parallel with SIA's Condition of Contracts. With the enactment of COTMA 2020 and Part A and Part B, we will review its impact on SIA Condition of Contract regards to EOT after the period of 7 April 2020 to 6 August 2020 and co-sharing of manpower related additional costs. Thank you. I hope that you will find today's session informative, and we are glad to share when we open the floor for questions. Thank you. Li Xiang, back to you.
Thank you, Richard. I'll hand this time back to MC to begin the presentation.
Thank you, webinar co-chairs. First up, we'll have Mr. Wong Kwan Kit, Senior Manager, Procurement Policies Department, BCA, who will be sharing on the overview of Part 8A and 8B under the COVID-19 Temporary Measures Act 2020. Wong Kit, please.
Thank you, MC. Thank you everyone for attending today's webinar on the COTMA revisions. My name is Kwan Kit. I'm from the Procurement Policies Department of BCA. So today I'll be actually bringing all of you here through what has been amended in the COVID-19 Temporary Measures Act. In short, we call it COTMA under the amendment number 3. Actually, it is actually not an amendment per se, but we actually introduced new relief measures for the built environment sector under Part 8A to 8C of the COTMA. So it generally does not amend earlier reliefs that has already been introduced under the COTMA. So before I actually begin, I'd like to share that this BCA, we don't give legal advice. So please bear with us. We would share whatever is necessary in terms of policy, why we actually come up with such provisions. But in terms of specific contractual issues, if any, participants are encouraged to seek their own legal advice because this is under the Act itself. So the agenda for today, I'll actually briefly go through what is the background on COTMA, followed by amendment number 3, which consists of Part 8A and 8B for the built environment sector, the PE sector, followed by probably 2 or 3 frequently asked questions before I end my presentation. So on the background of COTMA, it actually, like what Architect Tai mentioned just now, it arises back in April 2020, when Ministry of Law actually saw many individuals and businesses being affected due to COVID-19 and unable to perform their contractual obligations. And examples like construction projects being delayed due to circuit breakers and subsequent workers' availability issue. So the purpose of this legislation is actually meant to provide temporary relief for those who are unable to perform their contractual obligations because of COVID-19 and ensures that no single stakeholder in the built environment value chain bears an undue share of the burden caused by the pandemic. So since this is a legislation, it will apply to both public and private sector projects. So this is just a broad overview of the measures introduced by M&D, BCA, as well as URA under Amendment number 3. These are new relief measures, so it generally does not affect earlier relief measures. So if you can see, 8A, 8B, actually it affects the developer, the main contract, and the subcontractor. It is actually meant for construction contracts, for construction works as defined under the Building and Construction Industry Security of Payment Act. So 8A actually introduces a universal extension of time of 122 days for all construction contracts, be it main contract or subcontract. And Part 8B actually introduces a cost sharing for the contractors as against the upper tier customers or clients. For Part 8C, just to briefly introduce here, it is not in operation yet, probably next year. It's actually meant for developers to get some relief as against the purchasers. It will actually extend the date of vacant possession. I will not be covering in detail or any parts of 8C at all. My focus today will just be on part 8A and 8B. These two parts are actually the same terminology under the COVID Act. So if you're interested, you can actually go to Singapore Statutes Online and download a copy of the Act for your reading leisure. I'll move on to part 8A proper. And 8A is on the extension of time for construction contracts. So first, I'll just move on why we wanted to have this universal EOT. We noted that most construction contracts already have this EOT provision or extension of time. However, we noted that substantiating and assessing EOT requests are actually not helpful in the current environment when contracting parties, especially contractors or subcontractors, are seeking to recover from the pandemic. And we wanted to put in this universal 122 days of EOT so as to give contractors more time to complete projects, allow consistency in treatment across all construction contracts, and provide some certainty to the industry. So this 122 days of extension of time has earlier been established for public sector projects in September 2020. But now we have actually legislated through COTMA and extended to all construction contracts, which includes the private sector as well. So you may ask, what contract does it apply to? Okay, so it applies to all construction works defined under the Security of Payment Act in construction contracts. So these are construction works per se, and it does not include consultancy, does not include supply contracts. So this construction works in construction contracts, this contract must be entered into before 25th of March. Sorry, yeah. And the second condition is that construction works have not been certified to be completed as at 7th of April. 7th of April is the date of the circuit breaker, the starting date, and it remains in force. The contract remains in force on 2nd November 2020, which is the day the bill was, amendment number 3 bill was read in Parliament. However, there's an exception. The exception is if you fall under this exception, it means that you will not be given the 122 days of extension of time. So this relief actually essentially is you get it or you don't get it. It's 122 days or 0 days. So this exception is where if your contract actually have construction works carrying out between 20th of April and 30th of June, any single day within this period, you will not be entitled to this 122 days of extension of time. And the rationale is simple. I mean, if the project has actually restarted or continued during the circuit breaker, it is not proper in that sense to actually grant them the full 122 days. So I'll move on to what happens if we actually need more extension of time in subsequent slides. However, suffice to say, I'd like to just mention here, the eligibility criteria is not related to date of when BCA's approval to restart was given or when the site possession was given. So this 122 days essentially covers the period from 7th of April 2020 to 6th of August 2020. So under this statutory relief, contractual completion date is automatically extended. There is no need for contractors or even subcontractors to request or apply for this extension of time. And there's actually also no need for a supplementary agreement between the parties. However, we encourage parties to document this extension of time under Part A of COTMA for documentary purpose. So if, as I mentioned just now, parties require longer extension of time, okay, this is not covered under Part AA, but Part AA does not alter existing contractual provisions between the parties. So if your contract actually provides for extension of time, parties could rely on such existing contractual provisions or even come to a mutual understanding with your client or customer for such EOT if need be. And I'd like to actually mention about COTMA Part 2, Section 6 over here. As I mentioned just now, Amendment number 3 does not alter the existing reliefs under COTMA. So some of you may be aware, under Part 2, which has been earlier enacted in April, there is a provision whereby contractors who are unable to perform the contract on time and suffering liquidated damages, this group of contractors could serve the notification for relief through Ministry of Law to your client or customer, so as to have a defense in the event that you are being asked to pay liquidated damages. This relief is still applicable under Part 8A. So in other words, Part 8A and Part 2 will work concurrently. And this Part 2 relief is actually for a longer period from 1st of February 2020 to 31st of March 2021 next year. So in order to help the industry to have a better appreciation on whether your contract is eligible or not eligible for relief under Part 8A, we have actually provided a basic checklist under our Part 8A and Part 8B guide, which you can actually download from this link, or you can even bring up your phone and just scan the QR code over here to have a look at our guide. So this is a basic checklist for the industry to determine whether they fall under the eligibility criteria. Just please use it with caution, as it doesn't cover all the details, or if your contract is any is special, it doesn't cover the details. So before I move on, okay, I've actually taken 2 examples from our guide, which I would like to share probably in this webinar for better illustration. So this first example is example 2 in the guide, which I've shown the QR code as well as the link earlier. So the scenario is that this contract is eligible. I mean, it is signed before 25th of March, 7th April is still ongoing, 2nd November, the contract is still in force. So because of COVID-19, this contractor, party C, actually suffered a delay. And this delay, it falls nicely 122 days from 7th April to 6th August. In addition to that, there are also 15 days of delay before the circuit breaker due to delayed shipments from China, as well as delay due to lower productivity due to the safe management measures introduced on site after the work resumed. So in this case, this 122 days will be covered under the statutory relief under Part 8A. However, for any other delaying events beyond or rather before or after this 7th April to 6th August, parties would then need to rely on existing contract if there's any for your EOT entitlements. Next example, okay, similarly, I mean, the project actually is also eligible. However, this project on 2nd of November has already entered the defects liability period or rectification period, whatever, I mean, standard form of contract you might actually term it. So in a sense, it's certified to be completed by the contract administrator. Is now in the warranty period. So in this case, the relief will still apply, the 122 days, but any additional delay beyond this 122 days would contractor will be liable. So in this case, if it's 184 days of delay, the statutory relief under 8A will only reduce it by 122 to 62 days. So yes, so next I'll move on to Part 8B on the cost sharing in construction contracts. So the rationale for cost sharing is that we noted that most standard forms of contract actually does not entitle contractors or even subcontractors to claim for loss and expense arising from unforeseen events. So we wanted a relief measure that will help contractual parties, or rather the upstream contractual party, to co-share the costs borne by the contractors, so that no stakeholder in the value chain bears an undue share of the burden caused by the pandemic. And as earlier under EOT, I mean, cost sharing has also been introduced for the public sector projects in June this year. And now we're extending it to all construction contracts, including the private sector contracts. So the eligibility criteria for cost sharing under Part 8B will be almost identical to Part 8A, meaning that it must be construction works in construction contracts and the contract entered before 25th of March, where construction works have not been certified to be completed as of 7th of April and remains in force. The contract remains in force on 2nd of November. The only difference between Part 8A and 8B lies with the exception. So cost sharing would not apply to a contract where the client or the customer is an individual person. So, for example, it will include, say, HDB homeowner who engages a contractor to do up his renovation. This contractor would then not be able to claim cost sharing from the individual HDB owner. So this is because the owner is an individual person, not like a firm or contracting firm, which is a profit-making entity. I mean, exception or exception, I mean, like it or not, I mean, legally, if the individual is acting as a sole proprietor, he would then still have to bear the cost sharing because sole proprietorship is a business. And how does the cost sharing work? I have actually seen a lot of questions, especially on this cost sharing. Maybe I'll just take this opportunity to run through. So this cost sharing is actually like a normal payment claim. Contractors will claim it through their progress payment claim. So subcon will claim it through the main con, and main con will claim it to or claim against the developer. So we have actually, BCA have actually introduced a template, a suggested template, which I'll run through later. I mean, as well, this is actually available on our website. And the contract administrator will then have to evaluate such claims, and the employer issues the payment response, or if it's the evaluation by the contract administrator, if it's deemed the payment response, and yeah, so be it. So the important thing actually to note here is that under Part 8B, this is not tied to the extension of time given under Part 8A. The contractor will have to show the inability, and the first is that the inability is the contractor is unable to complete the construction works by the completion date. And this inability is a material extent caused by a COVID-19 event. As a result of this inability, contractor incurred qualifying costs. Qualifying costs is a defined term under the Act itself. I'll run through in the next slide. And this qualifying cost must be incurred between 7th of April and 31st of March next year. So in order to show this inability, contractors can actually show it through different ways. EOT would probably be the most sensible or even the easiest way to show. But for contracts that doesn't even have an EOT provision at all, then probably you contractors would need to show through examples like critical path analysis to show that you are unable to complete this works by the original completion date. The quantum of this cost sharing is 50% of the cost incurred. It must be actually incurred sum and capped at 0.2% of the contract sum per calendar month and total 1.8% of the contract sum. I'll have I'll run through the common template in subsequent slides. Just bear with me for a moment while I actually explain what is qualifying costs under the Act. So qualifying cost is a defined term under the Act, as I mentioned in my earlier slide. So it only includes rental of plant or equipment, site maintenance such as vector control utilities. You can have other site maintenance, security is fine. It also includes extension of insurance and performance bonds, as well as rent of fee for storage in Singapore to store your materials, your equipment, etc. So contractors are advised to include the relevant information and documents with the payment claim. And as I mentioned earlier, the template is actually available at this website. And you can actually click on it and have a look. So what are not claimable are actually manpower, acceleration costs, compliance with regulations, etc. These are costs which are already supported under existing support measures by the government or by the client. So this cost sharing, because it's claimed through the payment claim, it will be enforceable as a payment claim under the Security of Payment Act. Meaning if the client or the customer don't pay or don't acknowledge it, you can actually file for adjudication under the Security of Payment Act. And there's no requirement for a separate agreement because indeed it's a payment claim by itself, and payment claim can go through adjudication. And GST is not applicable because this is a relief measure. So as usual, I'll share two examples for this cost sharing before I move on to the template, as I mentioned earlier. So this contract fulfills the Part B eligibility criteria, like entered before 25th of March, 7th of April is still not certified completed, and 2nd of November is still in force. So the issue is that there were some delays, and subsequently when the work restarted, there were further delays because workers were placed on stay-home notice after work restarted. And this contractor, Party J, would need to incur rental costs for tower crane, for extension of insurance coverage for the project. Contractor will also need to pay qualifying costs to the subcontractors under their separate contract. So what is useful here, or the takeaway here under this example, we wanted to show that the contractor would then, assuming Party J is the main con, Party K is the developer, the main con would then be able to claim against the developer for the qualifying costs for those tower crane, insurance extension, as well as half of what the main con would have paid to his subcontractor as a qualifying cost. And this would be for the period from the delay period, both delay periods. Because the qualifying cost, as I mentioned earlier, can actually be computed from 7th of April this year to 31st of March next year, subject to the 0.2% calendar month, as well as the 1.8% cap, overall cap. So next example is the interaction with Part 8 relief. So I'll just take maybe this example to highlight about this Part 8 relief. So I'm not sure some of you here may be unaware or some of you may be aware, but I'll just like to point out, Part 8 relief is a totally different relief from Part 8A and 8B. In terms of the naming terminology, I mean, you ask AGC why they name it this way. But Part 8 relief essentially is a relief for the contractors as against the rental suppliers. So this example, I'll just run through how it actually interacts with another part of the relief under the COTMA itself. So this example, contract meets the Part 8B eligibility requirements before 25th of March, entered before 7th of April is still not completed, not certified to be completed. 2nd of November is still in force. So there were delay as usual, I mean, due to COVID. And the important thing is that this Party I contractor incurred costs for the rental of, say, a scissors lift meant for the construction works. And Party I, before Part 8A coming or 8B come into operation, actually already obtained a relief under Part 8. And Part 8 actually allows a contractor to apply for an assessment through the Ministry of Law to reduce the rental costs charged by buyers if there were issues or rather issues due to the COVID-19. So assessor has actually reduced the rental cost from 10K to 4,000 under the Part 8 relief earlier. So what is useful to know is that in 8B relief, contractor would then only be able to claim the net payable sum, which is $4,000 to the client or customer per se. So this is the point I wish to highlight over in this example. And the co-sharing will be 2,000 after you 50% of the 4,000. Maybe I pause over here just to mention Part A relief. I mean, if some of you here may be actually interested to know what is it, you all may visit Ministry of Law's website, and there's actually a link there for contractors to apply for an assessment. So I will not be covering that in detail because our focus here is on 8A and 8B, but just for your information. So this is the template that we have under Part 8B. So I see that I'm actually running a bit short of time. It's like more than half an hour. I still have the co-presenter, Mr. Edwin Lee. So I'll just basically move through this template quickly. So this template, you can just take a QR code, scan it. I'm afraid I don't have the time to do an interactive and then wait for you to scan. But anyway, the thing is that contract must meet the eligibility criteria, whereby the estimated completion date must be later than the original completion date, because the inability is to meet the completion date, as I mentioned earlier. So contractor has to show that there is an inability to meet that completion date. Subsequently, in each specified period under the Act is a defined term, and it essentially refers to calendar months, except for the first specified period, because it starts on 7th of April. The subsequent specified periods all starts on the 1st of every month and ends on the last day of every month. So every specified period, contractor have to show that inability, which is the date where he is unable to complete on time, and substantiate the inability is due to a material extent caused by a COVID-19 event. So the contract administrator will have to make his assessment whether is it indeed due to a COVID-19 event. And it comes the qualifying cost, which is the 4 items I mentioned earlier: rental of plant of equipment. So you can actually list any plant of equipment that you rented and the figures. Then let me see, I think I missed a slide. Yes, it will be the cost for maintaining the construction site, like vector and pest control, security, utilities, whatever. Contractors can actually list it down. Then we have the extension of insurance, extension of performance bond, the rental for storage in Singapore. Then it comes to the final sum, total qualifying costs, which you have to halve it because it's only 50%, and check against the cap, the 0.2% cap in that specified period, and whether it hits the 1.8% cap of the contract sum before arriving at the figure. So with that, I'd like to share the key takeaways from Part 8A and 8B. So eligibility criteria is only this 3. It is entered before, contract entered before 25th of March. Construction works has not been certified to be completed as the 7th April. The construction contract remains in force on 2nd of November. There is no need, to show like loss of productivity, etc. So long as these 3 eligibility criteria are met, is suffice. The only difference between 8A and 8B lies in the exception, where 8A actually, if you actually done work, or contractor actually done work between 20th of April and 30th of June, you'll be not eligible for the 122 days. And for Part 8B, the client's an individual person, is also not applicable. Relief would 8A would be the extension of time of 122 days, and under 8B would be the eligibility for contractor to make qualifying cost claims to their customers. So with that, I'll probably move on to 3 frequently asked questions, which we saw recently, that's being reflected. First is whether contractors can claim additional prelims for the extended time under 8A of the COTMA. So I'd like to highlight that under 8A of the COTMA is a statutory and not a contractual relief. The 8A relief, statutory relief, is stated very clearly under 8A that is only to treat the extended completion date as the contractual completion date and to extinguish any liability for the failure to complete. So these are the 2 effects of 8A of COTMA. If contractors wanted to claim additional prelims under the contract, you will need to check with your client. Next is whether it's does the relief apply if the project is already in the defects liability period or rectification period? As mentioned in my example earlier, yes, these are covered, the reliefs covered. But the thing is that if the contract has been terminated, okay, the relief will not apply. This is because we don't want it to affect contracts that have been concluded. Next, what if the contractor and customer already agreed on a private settlement? So private settlement will not restrict the application of the 8A and 8B relief. So for example, if there is a private settlement for 1 month extension of time from April 7 to August 6, the statutory relief, right, of 122 days will still be given, less the EOT that has already been agreed. So essentially, it means that the statutory relief will help you to top it up to 122 days for the period from April 7 to 6 of August, notwithstanding any private settlement that you have made earlier with your clients. So with that, I would like to show or pause sometime the reference here. So actually the Part 8 and 8B guide I mentioned earlier, the template for cost sharing, as well as the briefing slides. Briefing slides have not been uploaded as of now. We will attempt to upload it by the end of this week. Other than that, the circulars, the guide, and the template are already available at the link which I'm actually scrolling over here. As well as you can actually use your phone to scan the QR code on the right-hand side. So anything, you can just drop us email at BCA at this link feedback form. So with that, thank you for your attention. And I just want to highlight that this is not intended to be a legal discourse. And please check with your professionals if you have any specific issues relating to your contract that you would like some advice on. So thank you for your attention.
Thank you, Pankit. Next, you have Mr. Edwin Lee, founding partner of Eldon Law LLP, who will be sharing on the considerations of Part A and B under COVID-19 Temporary Measures Act 2020 from a legal perspective. Mr. Lee, please.
Oh, hello. Hi. Thank you, Pankit, for the very comprehensive presentation. So what I'm going to do now is I've been asked to present based on the legal perspective regarding these changes brought about by 8A and 8B. Okay. Just as Pankit has mentioned, although we are I'm presenting based on the legal perspective. This is not intended to be legal advice, but it is a general legal comment on each of these provisions. Now, what I'm going to do is I've split up the presentation very quickly into two parts. There are 3 sections in each part, and I touch on them very quickly. These are just to highlight how this 8A and 8B affect contract management issues. Okay? So the first I'm going to talk about will be the COTMA 122 universal extension of time versus contractual extension of time. How does the two interact with each other? And then what about activities which are outside the 7th of April to the 6th of August 2020? I think you've heard Pankit mention already actually that the normal EOT clauses would still apply. And what if the contractor is already in delay, actually concurrent delay during this period from 7 April to 6 August? That means they would not have finished the works anyway. With or without COVID, they would not have finished the works anyway. Would the contractor still be entitled to the universal 122 days? Okay, that's on Part 8A. On Part 8B, I will highlight again how the requirements for proving entitlement to cost sharing of claims, and then how this matter may be claimed in an adjudication and other proceedings, other legal proceedings. And finally, I'm going to touch on the need to give notification for relief to avoid liquidated damages for any period that is outside this 122 days. Okay, so let me just quickly start with the Part 8A. Now, as we all know, the completion date for construction works is extended by the universal 122 days. Now, it covers this period 7 April to 6 August. So what is important here is that it is not intended to have any overlap with the contract. So if you are entitled already to some extension of time under the contract for any part of this period, then the universal extension of time will only give you the balance of that 122 days, right? So that's quite important. But at the same time, I think from a contract management point of view, it no longer becomes very important for contracting parties to apply for extension of time for this period 7 April to 6 August, because everybody gets it. Everybody gets the extension of time. The only time where it becomes important is if you can make an application under the contract and the contract allows you to claim for prolongation costs. Because this universal 122 days gives you time, but does not give money to a contractor. But if your contract provides for any clauses which allows you to claim for extension of time, which will carry with it a entitlement to prolongation costs, then you should continue to claim that. So for example, if you can claim for 2 months under your contract, you should still claim for the 2 months under the contract and then receive the balance of the 122 days, right? 122 minus 60 days, the balance, receive it under the universal EOT, right? So this, and the next point I want to highlight is if you have delays falling outside the period of 7 April to 6 August, then the contractual extension of time should be applied for, right? So anything before 7 April, Kwan Kit, I think, gave it an example where suppliers are delayed, right? Or anything after 6 August, you need to follow the contractual clause and apply for extension. And as I mentioned earlier, what if the contractor from the beginning of time was never going to finish their works before the 6th of August 2020 anyway? Would they still be entitled to the 122 days of extension? The answer is very clear. The answer is yes. Okay, they will still be entitled because everybody is entitled to this 122 days. It's regardless of any delay, any concurrent delay by the contractor. Okay, let me move very quickly to cost sharing. To prove the entitlement to cost sharing, of course, apart from the dates of the contract, you have to ensure that the contract is before March, for example, 25th of March, and so on. There are 3 preconditions to claiming for cost sharing. The party claiming must show that he's unable to complete those works by the completion date, and the inability is to a material extent caused by a COVID-19 event. And of course, he must show that he has incurred or incurs any qualifying costs. So this point about incurred or incurs any qualifying costs, I think it takes away those costs for example, equipment which are wholly owned by the party themselves, they would not incur the qualifying cost because it's not a cost that they actually have to spend money to pay for. Okay? Unfortunately for them, because they happen to own it, so they don't incur that cost, and that won't be claimable. Now, the period of claim, the prescribed period of claim where cost sharing may be claimed is 7 April to 31st of March 2020. Sorry, 2021. That is 2021, sorry, on the slides. So now this is a prescribed period. It's more than 11 months. This is longer, right? This is much more generous than what previously already been stated in the BCA cost sharing guide. I think some of you will remember there was a circular on the 25th of September 2020, which was for 9 months, right? which was 9 months, but now it is extended up to 11 months, right? 7 April to 31st March 2021. Now, to be able to claim this cost sharing in the private sector or in the public sector, I think the section, there is a provision, section 39D, subsection 6, basically says that the cost sharing must be claimed in a payment claim. So this is something that I think if a party wishes to make an adjudication claim, they must present this. In a payment claim to be able to advance the claim in an adjudication. But just bear in mind, because this cost sharing claim is also stated as a claim for debt due. The act actually says this is a debt due. So because it is a debt that is due, then it can be claimed in any legal proceedings, not just adjudication. It can be claimed in court. That means you can sue for it, or it can be claimed in arbitration also, if the other party is denying the payment. Now, what is important and interesting is that, of course, this provision that you can claim for such prolongation costs, and actually for this part, it overrides section 17(2)(a) of the existing SOP Act. The existing SOP Act actually prevents claims for loss or expense, but there is this exception, which is part 8B, presents an exception to this to the SOP Act to enable contractors to be able to claim for this cost sharing. Now, do bear in mind, of course, that any adjudication application, the adjudication determination is only temporary. It's an interim decision. So the cost sharing entitlement, for example, there may be a dispute as to the amount or even the period, right, by the employer. There may be a dispute between the employer and the contractor as to the amount and the period. And this is decided one way by the adjudicator. But because in adjudication, that decision is temporary only. So whatever the adjudicator decides, of course, the employer will have to pay first, but it can be challenged later in arbitration or even in court proceedings. So an employer can actually seek to completely nullify the entitlement, for example, or the contractor may even try to apply for more if he feels that the adjudicator did not grant him enough. Okay. Now, the final point I want to make is actually outside of this 122 days of extension of time, if there is delay and no other entitlement to extension, then, for example, then the contract, for example, would apply, which says that liquidated damages may apply, right? So if, for example, the contractor may claim for cost sharing, for example, up to 31st of March 2021, but the employer may also seek to impose liquidated damages for delay during that same period. If, sometimes the employer may say, I do disagree, the contractor is still also in delay. Now, so for a contractor in such a situation, the best thing to do is actually to claim for relief under Part 2, Section 6 of the COTMA, right? That would actually provide contractors with a shield against any liquidated damages before 31st of March 2021, right? And that notification for relief must be issued before the 31st of March 2021. Right? It cannot be done anytime before. It must be done under Section 6 of the COTMA, and it must be formally applied for. It's a notification for relief under COTMA. Right? You can go to BCA website. There is some explanation on how that can be done. So the key point here is to avoid right? An employer imposing liquidated damages while you may at the same time be claiming for relief. And we don't want a situation where things are said to cancel each other out, for example. Then the notification for relief should be applied for. Okay, I think that brings me to the end of my presentation. Thank you. I think it brings us to question and answer time. Thank you.
Thank you, Mr. Lee. We will now move on to the Q&A session. Together with the four webinar co-chairs, we have Mr. Edwin Lee, founding partner, Elden Law LLP, Mr. Tan Chin Kiat, Group Director of Business Development Group, BCA, Engineer Eun Mang Hong, Director of Procurement Policies Department, BCA, and Ms. Lim Pui Shan, Deputy Director, Procurement Policies Department, BCA, to join us on the panel. You may participate in the conversation by posting your questions via the Q&A button on your screen or by clicking the raise hand button to ask verbal questions once we have activated the function. Over to you, webinar co-chairs, please.
Thank you. So as some of you might have read my message to the panelists, these are very comprehensive information that we can't even cover enough. So I've therefore broken it down to very quickly cover three areas from a developer's perspective, consultant's perspective, and lastly, builder's perspective. Three broad questions. Of course, we will make available the briefing material to you. And I think this certainly warrants more CPD, more seminars to go deeper again and again, because it's quite new to some of you as well, I understand. So let me just kickstart with one of the questions that was posted to us earlier. This question was actually talking about termination of contract or delay payment by developers. So the question specific is what recourse do vendors have if upstream client activate COTMA to delay payment or terminate contract? So maybe I will first invite Manhon to provide some answers in here. Then I will also ask panelists if you have actually come across instances like this, and if yes, how do you deal with this? Yeah, Manhon.
Yeah, okay. So under the part 2 of the COTMA, so you actually provide relief to both contractors and also the client as well, if there's inability to actually fulfill their contractual obligation. So if let's say the counterparty, that means the other party, they feel aggrieved by that, there's actually a mechanism under COTMA that they can actually go to the so-called COTMA assessor to actually apply for assessor determination to see whether the client, like for example, in this case, if the client, they actually issue a notice of relief to the contractor to say that they are unable to pay because of COVID. So what the contractor can do is actually they can actually make an application to the COTMA assessor to make a determination to see whether indeed the developer, the client, actually the inability to pay is due to COVID. Yeah.
Yeah, panelists, have you come across instances like this? I mean, so far we hear definitely from main builders are suffering a lot, but cases like this I have not personally come across. I don't know, have you?
I think so far we did not receive official record on contractor claiming or being terminated due to this unable, I mean, their ability to fulfill the contract. In our previous seminar, actually, we advise most of our builders, in the case if they are unable to fulfill the contract obligations, and the contract is actually ending within probably before August, we advise them actually to apply for the COTMA relief before the contract is over.
Okay, thanks, Meng. So sounds like the situation, this situation that was described may not be that common. Hopefully this will not be the case moving forward. And we certainly don't want to see developer unable to pay or terminating ongoing contracts. We move on to the second question, specifically affecting the consultants. There's a question that asks, will professional services contract with developer be covered under COTMA? I think certainly on consultants' mind was a question about prolongation cost. So maybe I'll again invite my colleague, either Manhon or Chiket to weigh in on this, and then I will certainly invite Richard to give his insight on this.
Okay.
And Zubun as well, yeah.
Okay. Chiket here. So I'll just mainly cover a bit about this. I think when we consulted the industry earlier on, we understand that in terms of the costs that's incurred by the consultants are mainly manpower costs compared to the builders, which actually incurred a lot of equipment costs as well. So if you look at this COTMA itself, when we talk about the prolongation costs, we actually excluded manpower costs, but mainly on the equipment costs as well. But the equipment, the manpower cost has earlier been covered by the JSS itself, and it will be covered until the March period. So it's a basis of co-sharing. So if you work out the variation, there's a tail down effect when we work out the JSS, which is also to help to co-share some of this burden and to keep jobs for people as well. It works out to roughly about 50, slightly more than 50%. So it's really a co-sharing basis. And also the other part on the overheads of the consultants, I think some of these rental rebates and property tax rebates will actually help to cover some of these costs earlier on that was given. So, but nonetheless, I would say we are actually closely monitoring the situation. If the need arises, we will actually look into it and actually see how we can further address this issue. Yeah.
Thanks, Chiket. So, Zubun or Richard? I know that you have brought up this many times, but I think again to lend clarity, how does it affect consultants? Maybe both of you can help to articulate. And then
maybe I'll go ahead first. Thanks, Li Xiang. I think from SISV viewpoint, we do receive quite a number of feedback from our members firm as well. Of course, the challenge is during I think many of the projects, especially development project, whether it be public sector or private sector, a lot of them are based on milestone payment. Of course, during this period whereby they are still probably working from home and they're not able to, the jobs are not exactly progressing, they may not be actually getting that payment. So I think there's one part in terms of the cash flow. And second part, I think when it prolongs, I think consultant, is mainly impacted by the manpower cost because of the actually all of us are actually contributing in terms of professional or technical staff. So certainly then there is an impact when the job get actually prolonged or extended. Yeah, wow, they'll certainly need to do inject more time. And then from a QS perspective also, during some of those measures that have been taken, especially from the public sector, right? You also require kind of doing 2 payments per month and so on and so forth kind of measures. So all these are kind of additional time that's been incurred on a consultant perspective. While we certainly understand that the JSS do cover some aspect of the cost, but however, I think there are still there's still a hit on some of our consultancy firm. Yep. I hand over to Richard to add on. Yep.
Okay, with this so-called so-called the section 8A and 8B, definitely attention has been given to the challenges that contractor face. But I said to say that we was hoping for something to address the situation that consultants are also facing. Looking at the universal EOT, which is given to contractors, the actual fact is 4 months, but on site the situation are actually worse than that because of the so-called distancing measure that we have to impose on the construction site. Jobs are actually delayed on top of the so-called lack of manpower, skilled workers. So the prolongation actually of a project goes beyond 4 months. In some cases, even goes up to a year. So, for example, a project of 2 years or 3 years, it may be extended by a year to 3 to 4 years. So, in this case, though the GSS actually does help to take care of certain cash flows for officers with more local or PR employee. However, of course, foreigners are not included. All right. Then in this case is that the GSS that was given is insufficient to cover this prolongation. Worse, to make it worse, some officers are taking so-called this COVID situation applies across all projects, not only certain projects. It's across all projects. So if your office are carrying so-called taking care of more projects, your impact is even greater. So in short is that the consulting firm that which came to us, they are expressing some of them are in dire straight situation. First and foremost is that there are projects whereby they are still doing a lot of work because they need to do a lot of coordination with the contractor with the current situation. They are spending more time to do the coordination, and of course with social distancing, then they also have this problem of going to site. In fact, most of them are actually working from home, and they are working longer hours because they need to coordinate with the contractor, spending more time, and some firms are not getting paid. Okay, these are some of the people actually came to us that they haven't been paid since February, even until as late as last month, because the client couldn't pay. Or not that the client couldn't pay, the client don't want to pay because there's no progress. All right, so
Okay.
imagine if you have a company to run, you have employee to pay, so you are really caught on both ends, you know. You on one end you have to spend more time to deal with the job, and yet you're not paid.
Thanks, Richard. So I think this issue is quite well brought up by you as well as the board at the various platform meetings. So as Chiket said, I think we are monitoring, but if you have actually concrete case of a dire situation with the numbers and impact, that's something we can take it further, right? I'd like to move on to, of course, issues that today we talk a lot about, which is universal EOT. So there is a question from Daphne Wong. The question is, restart for contract only in mid-June, with only workers staying at CTQ, TLQ on site. No specialist subcon approved, example, Powling and PNS. How does this affect the universal EOT? For projects that can restart, but their workers cannot be released from PDs, how does it affect the universal EOT? So this is just first of a few questions, all centering around universal EOT. So maybe we can start with this one. I think Manhon would like to help answer this.
Yeah, for this particular question, so the reason why we actually put 30th June as the cutoff is because this Act, Part 8A, actually applies to all applicable contracts, even very big contracts, big and small. So we need something that is easy to define. So because this Part 8A, we actually adopt an all or nothing approach. That means either you are eligible for the 1 to 2 days or you are not eligible. So for those contracts that are able to restart much earlier than, let's say, much earlier than 6 August, they are unlikely to actually have incurred delay quite close to 122 days. So for such circumstances, it may not be so appropriate to give them 122 days full EOT. So I think another thing to note is that the definition of construction work, we are talking about the construction works under the contract. So I understand that in the early days in June, many contractors, before they actually start work, they need to do a lot of preparatory works on site. Like, for example, demarcating the safe work zones, or maybe building temporary quarters to house the workers. So all these are actually not considered construction works per se. So maybe you can look at the work that actually done on site, whether they actually qualify under the construction work definition in the Act. Yeah.
Thanks, Manhon. Well, any panelists want to jump in, please feel free. If not, we can just take this dynamically because there are a few questions all around this universal EOT. Then we can actually just feel free to comment on principle basis or specific basis. Zibun, you pick up one particular question from Wang Dong Shu. Maybe you can help to.
Yep. Right, thanks, Li Xiang. I saw this from Dong Shu. I think the question goes this way. The co-sharing of the prolongation cost is allowed from 7 April 2020 to end March 2021, about 12 months. If contractor managed to eventually complete the project within 4 months of the universal EOT granted, say by August 2021, instead of the contract end date in April 2021, because the contractor rushed for progress during the last 4 months, then the question is, can contractors still claim for the co-sharing of prolongation costs between 7 April 2020 and 31st March 2021, which is the full 12 months due to several lack of manpower in the industry, or they will be only able to claim for the co-sharing costs up to 4 months of the actual delay only. Yep. So probably I just put to the panel, or Man Hong, your side, would they have any quick take on this?
Anyone can jump in.
Anyone can jump in. I think
Zibun, you have your own views? Yeah, go ahead.
I think a quick look at it. I mean, well, the question is quite long. I'm just trying to dissect out as well. Yeah, so I'm just thinking that I think talking about getting the universal extension, yeah, while thereafter the contractor actually managed to rush up during the last 4 months and get it completed. Yeah, so whether will they be entitled to the whole 12 months or not? Yeah, I think that's kind of what I guess, or just the 4 months. But I do understand that the co-sharing, there's also certain guidelines that they need to fulfill in terms of the specific qualifying costs, and also I believe the ability to demonstrate that it's also affected by COVID. Yeah, I don't think it's just straight ahead just by the timeline itself. Yeah, so it's a bit more than that. Yeah, so that's my view. Yeah, but of course, I think we need to look at the specific of the matters, yeah, in terms of the project. Yeah, so I'm just open up to the rest of the panel just to add on your thoughts. Yeah.
Can I just say something? Yeah.
Sure. Yeah, go ahead.
I think here the contractor is basically saying they ended earlier, but they are seeking still to claim the prolongation costs for the period after that, just because they are entitled to. Yep. Actually, the short answer, I think, from the Act is that the cost must first be incurred. So if they have already finished, they cannot say that they have actually incurred. So unfortunately, I don't think I think they're disqualified from claiming anything beyond the completion date, because they cannot say they have incurred any cost.
Yep.
Of course, the other point is that they may as well say, I've accelerated. So of course, all my incurring of the cost was compressed. But based on the co-sharing provision, we know that you can only claim 0.2% per month. So there is a cap. There's a natural cap already. You cannot put in everything, 5 months worth, and then sort of go beyond the 0.2%. So unfortunately, I think that he will face difficulty doing that. For a contractor in that position, I would actually suggest that contractually he should be making a claim for acceleration first. Right, so he will launch an acceleration claim on the contract. It cannot be done under COTMA anymore.
That's why it's so good to have a lawyer on your side.
Fully agree.
You see the clarity that he brings to this discussion. And as a typical built environment players, we tend to jump to the letter of the law, but he hovers above it and understand the first principle. So I think that's again a lesson learned for our players, that don't look at the letter of the act or the law, but rather understand the whole game plan and the rightful steps to take. So you're right, the acceleration should be granted first, agreed first, otherwise you get paid nothing if it's done on your own accord. Thanks, Edwin. Now, since you answered that question perfectly well, I'm going to reward you with another question.
Oh dear.
That's the one that you picked up,
Yeah.
which is from Ariel Tay. So let me help you by reading the question. Then you can concentrate on answering.
Okay, thank you.
It says reference is made to the amendment number 3, EOT of 122 days, not eligible for construction contracts where 1. Construction works were carried out between April 2020 and 30 June 2020, both dates inclusive. Example, if works were assessed to have substantially restarted on 25th June 2020, SO can grant EOT on an ex gratia basis for period between 7 April 2020 inclusive and 25th June 2020. Beyond 25th June 2020 should have no delay since works restarted. How to justify, the question is how to justify works have substantially restarted, how to address time due to loss of productivity even when works have resumed.
Okay. Well, I'm not sure that was a question I picked, but I'm happy to take. It's okay. I'm happy to take the question. Yeah, I'm happy to take the question. So the key here is the period of 20th April to 30th of June is the period where if the contractor actually did some works, they are no longer entitled to the universal 122 days. Okay, so I think the example given that actually they restarted on 25th of June 2020. So if you actually if the contractor started work on the 25th of June, unfortunately under the Act, he's no longer entitled to the universal EOT because it is within that window period that he carried on works. Now, of course, I think there's a reference to SO granting extension of time on an ex gratia basis for period between April to June. That could be under the earlier BCA circular where the SO can do that. And if the SO does that, that's good, right? That's good for the contractor. So the question is, beyond 25th of June, can he basically then make the claim? And how do you justify, right? Basically, a claim beyond 25th of June. Unfortunately, it means they have to claim under the contract, right? Because under COTMA, you don't get the universal extension. A contractor in that situation, I would advise actually should just give notification of relief first to prevent any LD from being imposed, right, up to 31st of March. So at least he's protected from LD. Whether he gets extension, if he's protected from LD, whether he gets extension may no longer be so important, unless, of course, he's trying to claim some prolongation. But for a contractor in that position, the prolongation cannot be claimed because he would have to show that he would be able to claim some cost sharing, right? Because it's under the cost sharing provision. But he would have to then show, of course, that he's affected by COVID. And that's why he's entitled to the any cost beyond 25th of June.
Okay. I have Kwang Kit who actually, you want to add on to this particular question, right, Kwang Kit? You want to add your answer? Yes. Can you please go ahead?
Okay, for earlier on, we actually have this circular advisory for government projects, where we actually mentioned that if projects restarted substantially, SO will have to consider such a provision. So this is under COTMA, this restarted substantially is no longer provided for in COTMA. So under COTMA Part 8A, so long as the projects have met the eligibility requirement, they'll get 122 days of EOT. If they don't meet it, they'll get 0. So, however, there's, earlier because we committed for public sector projects, if the public sector projects actually restarted substantially, the superintending officer under PSS-COC will still be able to give some ex gratia EOT. So it could be an instance whereby the contractor would say require extension of time, probably not the full 122 days. GPs or the superintending officer would then have the prerogative to give an ex gratia EOT. So it will depend on when it started substantially. So the reason why we have this restarted substantially is because we want to differentiate when BCA's approval was given earlier. Because BCA's approval given does not actually mean that the works has actually restarted on site. So we wanted to ensure that restarted substantially means the actual works being started on site and not tagged to the BCA approval when it was given.
Okay, thanks. Edwin, I'm going to come back to you because I finally got the right question. My sincere apologies.
Oh, no problem.
So this is a question about, just to be sure that I got it right, so I don't make you answer.
I think it's correct now. Yeah.
It's about the preliminaries, right?
Yes.
So the question is from, the question is, can we don't pay for contract preliminaries from 7 April to 6 August 2020 since there's no work, there's cost sharing? Question 2, if we have co-sharing qualifying costs from 7 August to 31st March 2021, can we prorate the reduction of respective contract preliminaries items? Question 3, for universal EOT, can we don't pay for contract preliminaries, qualifying costs, and manpower costs for this extension at the end of the contract period? 4, can we negotiate to reduce the amount of co-sharing of qualifying costs? Okay, sounds like someone trying to reduce costs.
Wow, so many questions, right?
Yeah.
They said the right one, just to be sure.
Okay, yes. So let me just pose the first one of the questions first, and that might set the tone for the discussion. For the universal extension, the question was, can we don't pay for contract preliminaries and manpower costs and so on for this extension at the end of the contract period? Now, for universal extension, this is not under the contract. So this is basically the COTMA giving a contractor time, but it doesn't necessarily give the contractor money. The money part has to come under the co-sharing provision. So under the contract, the preliminaries are basically not payable, right? He has to claim for cost sharing under the Part 8B. So that's the first point. And this answer applies to the very first question also, which is for contract, can we don't pay contract preliminaries from 7 April to 6 of August? I think 7 April to 6 August, again, is the universal EOT part, since there's no work and there is cost sharing. So the answer is yes again, because you know that particular timeline, if there's really no work done under the contract, preliminaries they don't attract preliminaries. The contractor can apply for cost sharing. So, and that is what the contractor, that's where it's a 50-50. So cost sharing is actually additional to the contract preliminaries. So the point here is contract preliminaries are suspended for the time being. They still will be payable, right, when the works are activated again. But in the meantime, you get cost sharing, which is in addition to whatever may be in the contract. So then the question is, if we have cost sharing qualifying costs from 7 August to 31st March, can we prorate the reduction of respective contract preliminary items? This one is clearer, because if after 7th of August works have resumed, the contractor is entitled to prelims under the contract. That is his contractual entitlement. And if there's cost sharing on top of that, cost sharing sits above the contract preliminaries. Okay, it sits on top because it's intended to be an additional payment. So the part is, unfortunately, that part, I think you cannot reduce costs, right? Because you have to pay on top of that. Okay, and of course, the final question is, can we negotiate to reduce the amount of cost sharing of qualifying costs? Of course, that it's always negotiable, right? You can always settle on the matter. In fact, I mean, in this environment, I think negotiation and settlement would be most encouraged, rather than because if not, you will end up in court or in adjudication.
Thanks, Edwin. You can take a rest now.
Thank you.
I would actually ask a general questions to all our panelists, but please add into Edwin. There are quite a number of questions about what happens after 122 days with productivity or loss of productivity weighing heavily on the minds of contractors. How do you assess EOT? How do you even try to apply for EOT? Any thoughts? it's okay if we don't have answers. We just do it at the next seminar. Yeah, I mean, you're probably the one that suffer the most from this.
Yeah.
Maybe you can state your claim.
I think for this question, actually, we have been discussing with Man Hong for, I think, at least 1 or 2 months on how to simplify, to come out a template to claim the prolongation cost due to worker shortage and also the SMM. Actually, based on our survey, I think the site is, our productivity level is actually at about 60-70% at the moment. So of course, I think one of the way is to use our critical path, as what Kwan Kit has actually mentioned in his presentation, to actually see pre-COVID level, and after COVID level, what kind of delay they actually we incurred, So that is one of the basis, So of course, I think the delay will be actually affected by the stages of the projects and type of projects, whether you use more machinery or use more manpower. So the impact will be quite different from project to project and also type of projects.
Okay, have you got any case that you started to build already in terms of these critical path analysis and what is likely?
Most of our contractors are actually preparing this critical path method now. That means based on our original critical path, and right now the current situation with less workers and also SMM measures, so we'll estimate our new completion time.
Okay,
to
so
assess
maybe
our
we
delay.
can at some point in time get sight of some of these learning that you have picked up.
Yep.
Yeah. Zubun or Richard, have you all come across as project administrators, or have you come across any preparation work in this area?
Okay, I can share. Basically, I think in most cases, all projects, the productivity of most projects are, if not all, are actually dropped. So basically 60 to 70%, depending on projects, are quite optimistic. It may not be, it may be worse than that. Because there are cases whereby you already got the BCA permission to start work, but the workers are stuck at the dormitory because there's a lockdown at the dormitory, so the workers couldn't come in. And on top of that, you have a lot of those safe distancing measure which is already in place. So we discourage workers from coming close to each other, and we actually divide the job site into zones, into many zones. So in terms of the workers that can come in to do their work, there will be definitely a drop in the numbers. And on top of that, I think there's a lot, these things that people are not really thinking about is the sequencing of work. So basically, if you do not want the different trades to actually come in to meet each other, you need to separate them. So one trade has to finish before the other trade comes in. So because of all these measures, there is actually a tremendous loss of productivity, because you need to clear one group of so-called the subcontract works before the other group can come in. So there's this coordination that you require, and then a lot of time is actually wasted in the coordination, the transition stage. So it's not easy to actually ascertain the loss, how much is the actual loss of productivity. So like I can say, maybe an example just now which I raised. Basically, the 4 months of EOT actually is a very clear cut in a way, because there's no work. But when the contractor started work, there are things like mobilization costs. There's remobilizing, because the job site actually stopped for so long. You have to remobilize. So you got to bring in machinery. You got to restart all the machinery again to make sure they are working. That will take some time. And then you need to coordinate all the contractors, subcontractors to come back to site. And then you need to educate them when to come in, when not to come in, so that they don't bounce into each other. So, and then also on top of that, I can hear from my contractors is that there's a lot of a lack of skilled workers. For example, tellers. There's a very dire straight kind of a lack of tellers in the market in the moment. So it's not easy. But there's a lot of factors that we actually need to consider if we were to really assess the EOT. And of course, to start off as consultant, we will ask the contractor, please justify. But I can tell you it's not easy for them to justify as well, because they need to really give us all the data, and all the data has to be verified by our site staff. So for a start, when we manage a project with, at the onset of this, or rather the starting of this CB, and after the CB, we actually ask contractor keep records, please. Then we ask them to report daily workers that's coming to site, and what is the optimum level of people to actually so-called do a productive work, that can do productive work on site. Because the thing is, for example, there are some sites originally before the CB, it was we are going at high speed of maybe 700 workers at one time. But right now we probably have 300-400 on site. So that is it's like less than half, you know. So and then but we still have to do the same amount of work. So of course the time will be extended. Yeah. So that's why the 4 months of so-called 1 to 2 days, actually it takes a year to recover the work. Yeah.
Okay. Thanks, Richard. Well, time flies. Actually, we have coming to the end of this session, but we really have so much more to cover. I'm sure we will plan more of this particular topic. So before we end off, let me just invite my panelists to maybe share a message for the participants, what you hope to see, perhaps particularly in the area of contract, navigating through contract complexities. Maybe I start off with my co-chair, Zerban.
Thanks, Li Xiang. For me, I think we really got a very good discussion at the starting point, and certainly there are good potential for us to have subsequent CPD webinar and things like that as we dive deeper. I think 2 points for me. One is that I think is actually we are not alone. I think, and a lot of things are new. We certainly need to work together to actually navigate this through. Even like what Yiming was saying, that I think on the contractor side, I think they are preparing information, data, and things like that. And as a consultant as well, we want to be also working along to understand their consideration and have kind of open mind to nothing is so straightforward. So I think we really need to work together. And second point for myself is really, I think with this whole episode of COVID, we do see that, I mean, working together, I think it's time to start thinking about, I think we'll be pushing about collaborative contracting and things like that, because about sharing risk location and things like that. So I think some of the discussion I had with some of my clients is also, I mean, of course, some of them are very worried that what's going to happen if it comes again. So in a new tender, should we tighten up some of this provision and things like that? I think the general advice on me will give is that I think it's important to have kind of some balancing, because there's no point stuffing everything into the contract and then to let one party carry it, because I think it's too heavy for one person to carry it. And then certainly then you also affect your tender price. The price will just goes up and people may not be interested to tender. So I think it's really having a paradigm shift that it's time to think about moving ahead in terms of kind of more collaborative and risk balancing moving ahead. Yeah. So that's my 2 key points. Li Xiang. Yeah.
Thanks, Zerban. So maybe next I invite Yiming, followed by Richard and Edwin.
Yeah.
Yiming, please.
In conclusion, I think first, I think I would like to thank BCA for organizing this webinar. I think it has been a very fruitful, and also thanks Kuan Kit and also Edwin for a very comprehensive presentation from the policy point of view and also legal comments. So from the builder perspective, of course, I think we would like the prolongation cost, especially Part 8B, the claim process to be further simplified to ease the claims, both for the consultant and also for the builders. I think this help also must come fast to the contractors, because many builders are actually suffering very tight cash flow position. And I think this, especially for the small and medium firms, they may not survive this situation long if they say the help come later, and we may lose this core competency in their field, which they have developed over the past few decades. And it will take many years to rebuild them if we lost them. So we are working with CIJC, I think, very closely. Maybe we would like to come out a template and also some guidelines on how to claim this prolongation cost. Yeah, thank you.
Thanks, Yiming. Richard?
Yeah, first and foremost, I'd like to thank BCA for putting this webinar together. I think it goes to show BCA's so-called attention on this industry and how to get the whole industry back on its feet and get out of this situation fast. I think the next thing that I thought we should BCA can so-called look into is to see whether the other sister agency can work together, because I think it's important the other sister agency need to see what the whole construction industry is going through, including consultants, okay? Because the prolongation of the project does cause a lot of hardship to many of our fellow consultants because of the extended time that we have to work, and then the so-called the without payment in some cases. So things like this, I think we need the sister agency to really look into the cash flow of all the consultants. Why would I say it? Because there are projects whereby their payment are only being released based on stage completion, and to some extent, some I get members who shared with me their projects are 80% completed, but they are probably paid much lesser than that. We hope that the sister agency can actually look at it and see whether a certain payment can be released a bit earlier to help them on the cash flow. All right, I think in the situation we are in, I don't think in any party can actually get out of the situation scot-free. We are actually in this together. Everybody suffer, but I think of course some people will suffer more than others, but we hope that we can work together and help each one another, whether be it contractor, developers, consultants. I think we need to look the other way and see how to arrive at a best win-win situation for everybody, and to be fair to everybody, because everybody suffers. Nobody is out of the woods. So nobody's excluded. We hope that we can approach this issue with an open mind and see how we can arrive at a win-win situation for all. Thank you.
Edwin?
Thank you. Thank you for organizing this. But the legislation actually is a very important first step. And perhaps this is the third step, since it's the third amendment. So it's a very important third step in addressing concerns. But I think what is important for all parties to realize is that if we are all seeking to protect ourselves to the maximum and trying to claim to the maximum, that may not give rise to a very cost-effective solution for all players in the industry. And the main point here is that it would be far better for parties to negotiate and arrive at an amicable resolution of each party's claims. You know, everybody wants the most, but I think there should be some compromise. And it's in everyone's interest, because that is the most cost-effective solution, right? Of course, as lawyers, you know, you want to go to litigation, it costs a lot of money, right? But that in fact cannot resolve parties' problems cost effectively. So to do that, I would actually ask for parties to consider mediation if necessary, negotiate and mediate if necessary, and arrive at some supplementary settlement agreements. That's all I have.
Thanks, Edwin. Very sound advice. So allow me to just represent my BCA colleague to again sum up this session. First of all, thank you to SISV, SCAL, and SIA for joining us for this webinar. By the number of people who attend, we can certainly see the strong interest in this area. And I'm a strong believer that while we do all things possible on the work site, on our processes, the contractual aspect is not to be taken lightly. because this could very well be the thing that trips us, that actually cause the good works in re-emerging stronger to actually fumble if we kind of everybody takes their own protective route through the legal means, as Edwin has highlighted. So I would actually strongly suggest that we all take a collaborative approach. Look at COTMA as a very good starting block, but the race is actually to be run by all of us, not in a competitive manner, but in a collaborative manner. Negotiation. Because COTMA can't address 100% of every little details of every project that has its own peculiar characteristics. So we really need everybody to, all hands on deck to cross the finishing line, so to speak. So once again, thank you all, and thank all the audience for your patience. Our staff will answer the questions post the webinar, and also make available the briefing materials. And in consultation with CIJC, I think we will plan further webinars on this particular topic and make sure that we all cross the finishing line together. All right. So thank you everyone for participating. I hand this time back over to MC. Thank you.
Thank you, webinar co-chairs. We've come to the end of this session. After exiting this webinar, you'll be directed to access an evaluation form for today's session. Once submitted, you will be able to download the speaker's presentation materials via the website as shown. On this note, we thank you for your participation and making this webinar a success. Signing off, this is Wei Wen from BCA.